All right, guys, so in this next lesson under price action patterns, this is again part 2. In part 1, we talked about triangles, right? In this lesson, we will be covering head and shoulder patterns. Now, head and shoulder patterns are a little bit better than triangles, in my opinion, right? They're kind of the next step. They are very common in the markets. You will see them everywhere. Now, are they better than triangles? Well, they're different, meaning that a triangle price action pattern will show us deceleration in the market, right? As you guys saw in the previous lesson. A head and shoulder pattern is it's literally a step ahead because it's starting to show us that the trend is reversing. You know, because with a head and shoulder pattern, we're either going to get a lower high or higher low, right? As the head and shoulder patterns is developing, which is very powerful, right? And like I said, it is a step ahead because of that lower high or higher low that you guys will see. So with that said, guys, to explain further what I'm talking about, let's have a look at those charts. At this time, we will be looking at head and shoulder patterns. Those are some of the most powerful patterns there are because they offer quite a bit of confirmation, such as, you know, rising wedges, falling wedges, they don't really do that. But head and shoulder patterns are very, very powerful. So I'm actually going to start out by drawing out a few head and shoulder patterns, just like I did in the previous examples, just so you guys understand what the pattern itself is. Now, you've seen it already. We've briefly talked about it. Let's do it again. So let's assume a bullish trend. Wave 1, breakout. Wave 2, pullback. Wave 3, biggest run we have. Wave 4, pullback. And wave 5, run. Okay? Now, what we talked about is that we could get something like an ABC pullback or a new trend. Well, that would potentially look something like this. Okay? What we have here is now a head and shoulder pattern. Okay? It's typically defined by a left shoulder, neckline, head, neckline, right shoulder. Okay? So let me just put some text in here. So this is a head and shoulder pattern. Right here, we have a left shoulder. It's typically classified as an LS. You would see that. Head. And right shoulder. Okay, this right here is the neckline. Okay, so this is a bearish reversal pattern. And the way we would typically play this is we would be spotting this head and shoulder pattern on the development of the right shoulder. Okay, so right now we would be looking at this. If we would be looking at a proper chart, we would be seeing that, okay, this bullish trend is potentially coming to an end because the wave 5 just happened. And we had this massive bearish move to that downside. And then all of a sudden, right now, you will be waiting for this right shoulder to develop. So what would you do? You would draw your Fibonacci retracement, and then you would kind of keep an eye out on it. It could retrace all the way to 0.382 and then start to go down from there, you know, or it could properly retrace to the right shoulder level. It could go to 0.618, a little bit higher, or just exactly at the left shoulder level. And then from here, take the trade down. Now, how would you play these kind of patterns? So this is obviously a bearish reversal pattern, but the way to play it is there's two ways, okay? One way is take that more advanced option, the riskier option, is it traded down on the right shoulder. So if you get a confirmed rejection, candlestick reversals, remember that? If you get a candlestick reversal on the right shoulder, then you can take the breakout, the break down to the downside. A little bit more aggressive. The second option is less aggressive, and that is to wait for the retest of the neckline. Okay, break and retest. What was once support becomes resistance. Remember that? What was once support, 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 break, retest, resistance, and now this is your entry right there. Okay, so there's multiple ways to play this pattern. Literally, you can play it on the development of that right shoulder, or you can play it once it breaks down and then pulls back, and then right here again, you'll be looking to take your trade. Right, so that is a head and shoulder pattern. Now, this can also happen in the opposite direction. So such as, just clear this. Meaning that it can be an inverted head and shoulder pattern. So, we could be trending downwards. Okay, bearish trend. And then price pops. And goes. And right here, what you have is an inverted head and shoulder pattern. It's the same thing, just a normal and then inverted head and shoulder pattern. So left shoulder, LS, head, right shoulder, RS, neckline, right? And same concept. You can take the more aggressive option and play the right shoulder as a breakout, or wait for the retest and then take the trade long on the rejection, which is the safer option. Okay. Now, this can obviously play out in different ways, so the neckline does not always have to be straight, horizontal like this, okay? The neckline can literally be diagonal, which it happens. And the way that would look like is, let's go to that first example here. As an example, this can break down, okay? And then you get this retracement to, let's say, 0.382, and then a trade down. This is also a head and shoulder pattern, but it's slanted. It's a slanted head and shoulder pattern, meaning you have a slanted neckline, right? So the neckline is now more of a trend line rather than a horizontal level, and slanted shoulders. Shoulders are also more of on a slant, right? Same slant as the neckline, right? So that is a slanted head and shoulder pattern, which this one's very powerful. It's even more powerful than the normal one. Why? Because we made a lower low, okay? This breakdown was a lower low rather than hitting support. It broke support and made a lower low, right? So this gives this pattern even a little bit stronger. But at the same time, you could also get a pattern that is not as clean as this. And it could potentially look like this. Hold on, let me delete this. Where this bearish move maybe is still trending higher, it's still making higher lows, and then you get a lower high, and then you break down. So this is not the best type of head and shoulder pattern. It still works, but this one's kind of weird because you would have this rising neckline, and because you have a higher low, this has a higher chance of it continuing higher, right? But so this kind of head and shoulder pattern, maybe you wouldn't take the more aggressive option and play the breakdown. You would wait for the breakdown and then take the retest. That's important to know, okay? So the one with a straight neckline is a great option, and you can take both options. Take the more aggressive breakout or take the retest, okay? The one that has the bullish move, like in this case, and it looks more like that, where it pops to the upside, it breaks the neckline and gives you a higher low. Well, this has more bullish pressure. This is one of the safest head and shoulder patterns to play because it already gave you that breakout. It already gave you a trend change, and now this is a confirmation of that trend change, right? Whereas here you do not have a trend change yet. You're still making higher lows, and the trend change happened. The first sign of a trend change was the right shoulder, and the confirmation was once it broke down. You know what I mean? Whereas the first trend change was on the break of the neckline, and the confirmation happened over here. So this one's a little bit more delayed, whereas this one's already giving you a trend change. So it's safer to play the advanced option. Does that make sense? I hope that makes sense. Let me draw in a normal head and shoulder pattern just so you guys can fully kind of understand it. And I highly recommend take notes, draw it out on your own and such. So here we have a straight neckline, okay, and straight shoulders. So this is the most common option that everybody sees, okay? And it's a great head and shoulder pattern. And you can, again, take the more aggressive option or take the retest of the neckline, you know? Then you would get something like this. This is, in my opinion, the best head and shoulder pattern. Why? Because like in this case, you do not have a confirmed trend change. This breakdown did not break down. If it broke down, you would get a trend change is developing. You have a lower low, but we do not have a lower low. We're still sitting at support, okay? So the first sign of a trend change is this lower high, okay? So that's the first sign. Confirmation is on the break and retest, okay? Same thing in this case. In this case, we're still trending upwards. This is even worse than this because we did not even make the recent lows yet. We're still making higher lows. So the first sign of a potential trend change is right here, okay, on the right shoulder. Confirmation is once we break down. Whereas with this head and shoulder pattern, the first sign of a trend change is the breakout, okay? Not here, not there, it's the breakout. So that is our first sign of a trend change. And then this is the confirmation, not the breakdown, The confirmation is the right shoulder, which in this case, the right shoulder is the first sign of a trend change, okay? Whereas in this case, the right shoulder is the confirmation of the trend change. Why? Because the trend change already was initiated with this higher high. So I hope that makes sense, but these are all reversal patterns. You can also find these as continuation patterns, meaning they, let's reverse this a little bit. That you can kind of come in, I'll just show you one example of this because it's not that common. But it would look like this, you would have a bearish trend, and then all of a sudden you get something like that, and then it's a continuation to the downside. It happens. So let's assume again we have a bearish trend, and then you get something like that and it continues to the downside. Okay, so that's a continuation, this is a continuation, and the previous ones were reversal patterns. So I hope that makes sense. Again, take notes, take lots of notes, watch this as many times as you have to, but let's have a look at some examples. Okay, so the first example I'm going to show you is a pattern in development, okay? So here's a weekly chart on euro dollar, and we have a head and shoulder pattern that might be developing, okay? The reason why I say that is because look, we're at the neckline, we're at support, okay? And guess what? We're breaking the neckline. So the neckline looks more like this now, okay? Because we're just breaking it right now. So the head and shoulder pattern could look like this. And then try your Fibonacci. And the potential entry, let me delete this line. Potential entry would be, if it pulls back, that is, right there. Right, so that would be the first entry, and then the retest would be the second entry. So this is a head and shoulder pattern that might be developing. We don't know whether it will develop because it could just continue lower and then there's no more head and shoulder pattern, right? This is something that you would kind of watch out for. So I'll personally now we'll be looking for a pullback, see if there's a right shoulder, and if there is a right shoulder, then it will be a great option to the downside, right? So that's a head and shoulder pattern in development. Let's have a look at one that has already developed. And we have an example here. So right here, top of a trend, right? It's been trending upwards. And what do we have? Well, it starts off as a proper head and shoulder pattern. Right, so this is a head and shoulder pattern. You're already also developing bearish MACD. This typically goes from the left shoulder to the head, right? You see that? So we have divergence, high, higher high, whereas here we have a lower high. And then left shoulder, head, neckline, right shoulder, breakdown. It's not clean price action. I didn't trade this, but it is a head and shoulder pattern. Okay. Now another option is an inverted head and shoulder pattern, which is right here. These are, like I said, very common. They happen a lot. Right, so left shoulder, head, right shoulder, breakout. Okay, and I'll show you one more. And again, same as with the previous lesson, this is homework for you guys. Make sure you spend some time and actually look for it. And here we have an inverted head and shoulder pattern on the weekly chart. You know, left shoulder, head, right shoulder, and you can play the trade to the upside. Right, and then it didn't get too far because this trend over here didn't last too long, and it even created something that we learned from the previous lesson. Just a little rising wedge. You can draw this many different ways. Draw it the larger way, you know. Something like that. It doesn't always have to be perfection, right? But this is kind of a rising wedge, and then it broke back down. You know, so head and shoulder pattern worked out, but it didn't get too far, you know, and then it slowed down. So that's head and shoulder pattern, guys. That's what it looks like. That's what you look for. Now, time for you guys to practice that on by yourself. So look for the charts, look for the patterns on the charts, and just get yourself familiar with it, just so your eye picks it up immediately when it's developing. That's the most important part, not after. In this case, you have to practice what it looks like after the fact, but in the real world, obviously you need to pick up on these patterns as they are developing. And that's something that, you know, you guys will just get better and better and better. The more chart time you have, the more you look at the charts, that is, you know. So with that said, that is it for this head and shoulder pattern lesson, and I will see you guys in the next one.